cooperative banking community. My name is Manoj Agrawal. I'm the group editor at Banking Frontiers. I'm really pleased to have all of you at FCBA 2020, and I welcome you to the compliance session today. For our panel discussion today, we have eminent speakers from cooperative banks, and the session is led by Shri Pramod Karnad, former Managing Director at the Maharashtra State Cooperative Bank. I would request Pramodji to take over the session.
Thank you, Manoj. Thank you so much for this formal introduction. It's great pleasure to be here on the FCBA platform for the Banking Frontiers in the session called Hello Compliance. So how are the organizations engaging in the new realms of compliance, and how can partners support in this area? This is the subject of this panel discussion. To begin with, Mr. Dilip Dighe. He is the General Manager of Maharashtra State Cooperative Bank. We have with us Pradeep Naik, the CEO and Managing Director of Raigad DCC Bank. We have with us Vinod Dadlani ji, who is the CEO and General Manager of Kalupur Commercial Cooperative Bank, Ahmedabad. We also have Rajendra Bhilare, who is the General Manager of Satara DCC Bank. We have Suryakant Patil Budhyalkar, who is the ex-Vice Chairman and Sitting Director of Veerashayu Cooperative Bank, Kolhapur. And we have Maheshwar Pathak, who is the Head Pre-Sales and Solutions of IDBI Intech, right? To begin with and to have some introduction on this subject, I will first say something about the compliance. Regular compliance, regulatory compliance and regular compliance, there is some difference. When we talk of the compliance means it is always a conforming to a rule such as specification or a policy or standard or law, And when we speak of regulatory compliance means it is an organization's adherence to the laws, regulations, guidelines, and specifications which are relevant to the business processes, And violation of regulations, regulatory compliance often result in legal punishment like fines or show cause notices or warnings, etc. from the regulators. They are specifying certain things to us, issuing directions, issuing guidelines, issuing actions framework and all that. So banks have to comply. Banks have to comply to the audit and inspections. Let me first go to Mr. Vinod Dadlani. Vinod is the Chief Executive Officer of Kalupur Commercial Cooperative Bank. So I will ask you, post BR Act amendment, do you think there is a great significance to the compliance part for the cooperative banks in overall regulatory emerging environment?
Thank you very much, first of all, for inviting me as a panelist in this important session on Hello Compliance. See, compliance has taken a significant importance post this BR Act amendment. Hitherto, as you rightly said, there were, for urban cooperative banks, basically, there were two compliance authorities. One was Reserve Bank of India under BR Act, Section 56. And another was, of course, for multi-state cooperative banks, CRCS, and for uni-state cooperative banks, it was RCS. Now, this BR Act amendment has thrown a new compliance responsibilities on the banks. Hitherto, business of the banking was controlled by Reserve Bank of India by drawing various regulations, be it exposure norms, be it other restrictions. So those were related to business. So post this, if you see, the management of the bank is also under Reserve Bank of India regulation. Be it constitution of board, election, recruitment, auditor appointment, removal, everything is now, including share capital, bylaws amendment, internal rules also, ground rules, everything now it has fallen into Reserve Bank of India control. So now onwards, if you see the spirit of the regulations, all UCBs will have to work in such a scenario where there is a complete compliance culture in the bank. You know, world over, if you see, all the banks function and do the business as desired by the regulators. If regulator is desiring that UCBs have to do business in certain form, in certain way, be it priority sector advances, be it weaker section advances, or be it accepting deposits, bulk deposit, pricing, etc., or ALM control. The expectations of the regulator, keeping in mind, we have to do business. As an urban cooperative bank, we have to then analyze that what type of skill set I have, what type of technology I have, and what type of business environment I am doing, whether I am running a concentration risk or what are other aspects. So considering all those aspects, as well as ensuring complete transparency and governance in doing business, if we do business, then there is a sustainability, long-term sustainability. Otherwise, we'll be thrown out of the business. So one is we have to have a compliance culture. We have to ensure that our staff is compliance savvy. We do business with utmost governance and transparency. We have the strong system and controls put in place through technology or through robust inspection system, constant monitoring, so that we can be sure, or we are absolutely sure that there will be no non-compliance in any such regulation which are in force today or which may come into force later on.
Yes.
So that is very, very important. Now, for creating this compliance culture, what I have to do, I have to have a very strong inspection audit department. You rightly said, with proper manpower, continuous training, continuous monitoring of that department, and result-oriented approach.
Absolutely.
Plus, along with that, I will have to have a strong accountability function also. If there are some lapses, man-made, system-related, or whatever, how I need to control and what actions I will take that will prevent others from committing those errors or mistakes. So that type of culture has to be created. Business, taking business also, I have to take into account the risk. So risk-based audit system has to be implemented by all the UCBs. Strong technology will definitely need to achieve those things, because the inspection, if done in a traditional manner, manual way, may not give you assurance that you are 100% compliant. So there may be some loops, there may be certain areas which cannot be attended. So definitely those areas are required to be attended through strong IT systems and strong manpower with proper skill set. So
Yes, Mr. Vinod, yeah. So to conclude your view, it is very necessary that we give a serious thought on the compliance department as well. We have a good team for the compliance department, headed by excellent executive, supported by experienced staff, and compliance should not be taken in easy manner, right? Thank you, Vinod, for your comments. Let me come to another representative from Urban Cooperative Bank here in the panel. We have Suryakant Patil, who is ex-Vice Chairman and Sitting Director of Veerashaiva Cooperative Bank, Kolhapur. Mr. Patil, I would like to ask you, how do you view this SAF, Supervisory Action Framework, as a tool of regulatory compliance by RBI to urban cooperative banks? Please comment.
Actually, earlier it was just like a guideline in the by the 2014 circular, but with the January 2020 circular, the Reserve Bank, the regulator, expects that the stress areas should be identified at the earliest, so that before you become sick, it should be a preventive tool rather than a curative tool. The supervisory action framework looks at that. However, with the earlier, they used to give proper time if there is a failure on any one area, say for growing NPAs of a bank. The regulator used to give you a specific time to come out of the stress, and then if you are planning properly and the efforts are seen by the regulator, they used to give some more extended time. However, with the new BR Act, we see that there is a threat that RBI may not give you time at all. What I look at the new provisions of the new amendment, it seems that in the interest of the depositors, one day if the bank fails on certain counts, what I look at is that one another decision by the RBI can be taken, and somebody from another bank where the regulator decides, they can come up and directly decide upon the merger. A decision to that level can be taken. So it is a far more serious viewpoint that every management should take about the new amendments of the BR Act. Now, most of the banks in my area also have been going for the elections. So there is a viewpoint, people are not aware whether the provisions of the BR Act are going to be, should be taken into consideration while preparing for the elections. Whereas the election officers or the, you can say the central registrar or the Cooperative Act doesn't provide for taking proper cognizance of the BR Act, say section 10 regarding the fit and proper or professional directors. These problems are being faced right now even by my bank because we are in the process of election.
Thank you, Suryakantji. Thank you for your view. In fact, you accept that the regulators are imposing a supervisory action frame and other tools, and all urban cooperative banks, the heads of the compliance department, they should be conversant with those things and attentive for that. But do you think it is rather little stringent? Let me ask this question to the General Manager of Maharashtra State Cooperative Bank, Mr. Dilip Dighe. So what is your view, whether it is stringent when particularly we are in a digital era? What is your view on that? And why don't you comply to the norms? What is your difficulty?
First answer to your question, the norms are stringent. Yes, I have my preposition with due respect to regulator that putting up the regulatory parameters to comply for net banking, one of the parameters is gross NPA. That should be less than 6%. Here I want to contribute before this forum of the banking frontiers and all my fellow counterparts that NPAs are the embedded risk for any bank to say, because NPA, they are going to stay as long as bank is there. So I think regulator should see that move towards cashless economy. That is the thrust given by central government. It cannot be achieved by imposing such norms. To counter this, I suggest that they should allow cooperative banks to adhere to the cyber security protocols, wherein the transactions are protected, the money of the members is protected, and the facility is available to all the members. Yeah. But see, the cooperative banks where they are placed, they don't have adequate IT infrastructure to cater to these requirements. They don't have skilled technical manpower to handle these operations, and most important, most of the banks, they cannot support the huge investment that is required for creating such a robust IT infrastructure. And moving further, I suggest that any single bank, barring few good banks in the state, most of the banks cannot go for this. if at all we want to move towards cashless economy, we need to focus on cooperative banks and the members which cooperative banks are serving in the rural India. How this can be possible? I have a solution where creating an entity of the cooperatives promoted by the cooperatives to serve this creation of IT infrastructure, provision of skilled manpower, training to the bank staff, and thereby this infrastructure that is required for giving services to the members can be made possible.
No, but really I wonder, because large size state cooperative bank like MSC Bank, I am also a past managing director of this bank, so I have more concern. How you cope up in this 30 lakhs limit housing loan limit? Please.
Unfortunately, today's scenario remains the same. RBI is much, during discussion, they are quite optimistic. They say that we are considering it. Since I think 1996 CMA guidelines are posted, but there is not a single revision in those norms.
I will move to another district central cooperative bank representative, Mr. Rajendra Bilare. Rajendra Bilare ji, you are the general manager of Satara DCC Bank. Satara DCC Bank is one of the best operated district central cooperative banks in Maharashtra. In fact, in India, I can say. In all parameters, you are the best cooperative district central cooperative bank. District central cooperative bank is another privileged sector. As we speak about the amendments in Banking Regulation Act, we commented that urban cooperative banks have been brought at par with commercial bank, but still district central cooperative bank is still a privileged sector, because you are basically agriculture lender. When I am saying that you are a relaxed category or in a privileged sector, I say that for urban cooperative banks, the CD ratio might be 70 to 75% is the benchmark CD ratio. But in case of DCC Bank, even 100% CD ratio is acceptable, because the most of the advances are for the agriculture. So 125% of CD ratio is acceptable to RBI, but not in case of commercial banks and urban cooperative banks. Similarly, another relaxed norm, I can say that the GOI securities in investment, the HTM category maximum of 25%. For others, it is for 25%, even for a state cooperative bank. But for DCC Bank, you can park more than 25% in HTM category. So you can avoid that mark-to-market provisions here. So it has a relaxed sort of category, I can say. In general, the gross NPA level, even if it is up to 15%, it is tolerable. Though the actual tolerable limit is not, it should not be more than 5%. But up to 15% gross NPA, RBI is not taking any action against DCC Bank. So they are in a relaxed category. So my question to you, if the supervisory action framework and other tight regulatory norms are made applicable to DCC banks, then how you will cope up with this situation? How DCC bank or your bank, what will be the status of DCC bank if it is at par with other banks like commercial banks or urban cooperative banks? How do you view that?
Yes, sir. Thank you, sir. And good afternoon to all the participants, and especially for the banking frontiers. We have arranged such type of excellent program. And I also would like to thank Honorable Mr. Karnar sir, who is hosting this program. On behalf of, I think, Banking Frontier, he is the former MD of Maharashtra State Cooperative Bank. He is well experienced in the cooperative sector, especially rural cooperative sector, because Maharashtra State Cooperative Bank is the Shikhar bank for us in Maharashtra. And we have all-time guidelines we have received from Honorable Mr. Karnar sir. Thank you for that. Sir, we are talking on the issue that is the supervisory action framework, which is imposed on urban cooperative banks recently. And on this scenario, while talking, we know that our supervisory uh, bank, NABARD, is giving us camel check rating since long. And this supervisory rating is one of the part of this camel check rating. That is, first of all, it is capital adequacy, then asset quality and earnings, which is integrated with each other. Now, as far as urban cooperative banks are concerned, it will be very much tough for them to comply such type of tight regulations. And further, we have to see whether what type of action RBI will going to take in future. Of course, we are not received such type of any guidelines from RBI. On this forum, I come to know about this supervisory action framework. We are also discussing within such type of scenario that recently COVID-19 pandemic the bank is facing. As far as DCC banks are concerned, as we all know, in Maharashtra that there are 31 DCCBs. Out of that, most of the DCC banks are already weak. And Western Maharashtra, like Pune, Ahmednagar, Satara, Sangli, Kolhapur, and in Konkan region, Raigad, Ratnagiri, and Kolhapur, they are doing well on their behalf. They are showing nice parameters of camel check. But as earlier told by Honorable Karnar sir, that Satara DCCB is one of the best district corporate bank, not only in Maharashtra but all over India. Banking Frontier has already awarded our bank 3 awards for 2019-20, which is Best Bank Award, Best Digital Bank Award, and Best IT Leadership Award.
Yes.
I would like to thank Banking Frontiers. But there is not much difference between, I think, in between RBI, urban cooperative banks, and district center cooperative banks. Most of them are working in the rural area. We, as a district center cooperative bank, are definitely working in the rural area. Now, as far as we'll take one by one. We first take, sir, capital adequacy. We have two act. We are working under two act: Banking Regulation Act as applicable to cooperative societies, and also Maharashtra State Cooperative Act 1960. So, as per Maharashtra State Cooperative Banks Act provision, we have some limitations to take funds in our paid up share capital. There is cap of rupees 20,000. So I think that is there is already saturation to recover the paid up share capital of the bank. Another source to raise the capital is statutory reserve, which is appropriated through profit. And if the asset quality is not good, the banks will not earn the profit. And if there is no profit, we cannot appropriate to the funds of the bank. So there is limitations for district central cooperative banks. We have already written to Honorable Commissioner, Honorable Cooperation Minister, Maharashtra State, and we have already written to State Cooperative Bank and NABARD also to raise this cap of rupees 20,000 so as to enable us to increase our capital base. So there is. We are doing on-lending finance through our PACs, and if there is saturation to raise our capital fund, there it is impossible to maintain the capital adequacy for DCC banks. But we have requested, our bank especially has requested NABARD and our State Cooperative Bank and government that they should consider the reserve fund, which is maintained by PACs, as a deposit to our bank, as like SLR for them. So and it is non-refundable to them. So it should be considered as tied to capital, or somewhat portion of the non-refundable reserve fund of PACs should be considered as tied to capital or whatever it may be, so that we can show the better capital adequacy So another parameter which is very tough in the today's scenario after post-COVID, that is asset quality. Sir, yes, asset quality. The asset quality, our 50% of lending is for agriculture, which is through PACs. So we have our loan portfolio is about 5,500 crores, and nearly about 2,500 to 300 crores are disbursed to the farmers through PACs. So there is, although there is some relaxation for IRAC norms for asset classification of agriculture finance, but government intervention, man-made crisis, and some climatic conditions like heavy rain, drought, and today's scenario like COVID-19 pandemic. So in this scenario, farmers are unable to pay their dues to the bank in time. Sometimes government are, most of the times government is intervening a bit to repay the farmers. They are ordering to not to recover the amount in due course. So there are most difficulties to DCC banks to recover the amount. And secondly, the 2 or 3 debt waiver schemes currently going on. First is the CSM SSY 2017. Secondly, the MJP SKY, it is 2019. Both are not completed yet. So farmers' mindset is going to such a way that they should not repay the amount. They are waiting for the another debt waiver scheme.
Yes, very true.
Yes, sir. So there are 2 types of difficulties in front of decision cooperative banks. There was COVID-19 pandemic. Still, we have shown the better performance of our bank. As on 30th June 2020, we have record break of recovery of 98%. Sir.
Very nice.
So, and for the last 12 years, we have, as you know, that the NPA position of our bank, which is almost below 0.5% for the last 12 years.
Very nice. Congratulations, Mr. Rajendra. In continuation of Rajendra Bilare's speech, now even if we are unwilling to comply or we have constraint in complying to the regulator's expectation, but still we have to comply. And if we don't comply, the penalty is imposed. Now RBI imposes penalty in cash. We see that the RBI's penalty to commercial banks, PSU banks are in crores. We read the news that this so-and-so PSU bank is penalized by 5 crore, 10 crore. This private sector bank is penalized by 5 crore for non-adherence to the KYC norm and all that. But when it comes to the cooperative sector is tiny, the capital is small, deposit size or their bank size is small, particularly there are very small urban cooperative banks who cannot comply 100% to KYC norms, but then they are penalized. And the penalty is always in cash. Now it can be 10 lakh, 15 lakh, 50 lakhs, 1 crore. So many urban cooperative banks have suffered. Even CRR default is has a cash penalty. So many a times it happens that SLR or CRR compliance, I mean, it is not maintained on particular day. There is a default in CRR or SLR. But if the CRR default is more than 3 times, stringent action is taken. If SLR default is more than certain period, then penalty is imposed. So it's very difficult for the urban cooperative banks. So my question to Mr. Dige, last question to you, then I will move to Maheshwar Pathak ji, who is a IT person. I will ask you IT related question to you. But before that, Mr. Dige, if penalty is imposed, now penalty is imposed to small urban cooperative bank, DCC bank, how you view this penalty to small urban cooperative banks in cash?
Coming to your answer, I would rather say that world of banking is controlled by the single regulator and by the single set of norms set in those particular country. In India, we have a separate set of regulators for maybe for some reasons. In the near future, these regulatory restrictions are to be converged to a single set of rules. We cooperative banks should prepare our mindset for the stringent supervisory action framework in the near future to come. So if we prepare our mindset for the stringent norms, I think this penalty issue won't arise at all.
Okay, Mr. Suryakant, I will also ask Mr. Vinod, what is your view on the cash penalty? Let Mr. Suryakant say, if cash penalty is there, are we ready?
No.
Or are we rectifying ourselves if there is a cash penalty for non-compliance?
It has been fortunate for banks in my region that no such penalties have been done, and our performance in our area has been good so far in spite of the pandemic situation. But there are a few problem areas which I see, especially after the March 20 circular regarding the exposure norms which have been changed, and also that more than 50% loans have to be given below 25 lakhs.
Yeah.
These are stressing the urban cooperative banks mostly. Exposure norms earlier for my bank, for example, it was 15 crores to one account and 30 crores to the group. Now it has been reduced to 8.5 crores for one account and 15 crores to the group. I already have several accounts which were beyond 10 crores, say 12, 13 crores. And now with the changing exposure norms, we are put in stress that before 23, we have to get it reduced. After the pandemic effect, we were told that we have to support the good account holders by giving them 20% additional funding. But unfortunately, as our exposure norms are reduced, we cannot support our good customers by giving that additional support to them. However, we were forced to go in for taking partners, and we then went into consortium financing. We ourselves led our several account holders, good account holders, and we requested several other banks like Rajaram Bapu Bank or Ichalkarji Janata Bank, Apna Bank, and then we came together to support these good account holders. These are several areas where we feel we are stressed.
Okay. Yeah, Mr. Vinod, let me ask you one small question on this particular backdrop, that if the cash penalty is one thing, but suppose such supervisory action framework is continuously, if you feel that it is very stringent, RBI has also given one option via their directive only, or I mean their directive circular only, that you can get yourself converted back into a cooperative credit society, or you can get converted into small finance bank. So, and we know that Shivalik Urban Cooperative Bank got converted into small finance bank. They opted for that after that circular. Instead of facing the stringent norm, they have turned over and they have shifted to small finance bank. So, what is your view on that?
Yeah, thank you. First of all, after listening, Shri Suryakant Patel ji, I can see there is a cooperation between cooperative built up because of regulations. See, 4 or 5 banks coming together and lending a borrower jointly in consortium or multiple banking because of new exposure norms. That is really a good beginning. I think that should be encouraged. Now, coming to the earlier questions regarding this penalty. See, my point will be, when regulator finds some non-compliance, then from regulatory angle also it has to study what is the severity of non-compliance, what is the intensity, what is the intention of the bank, what are the systems and controls in place, whether it is unintentional mistake or there is a complete procedural lapse, there is no control of the management. So considering those aspects, penalty measures should be adopted. You are very right that in a very small unit bank, there may be unintentional and some procedural lapse which may not harm depositors or the customers of the bank. There, regulator should actually support that and see that it is mitigated instead of
RBI is taking KYC norm and anti-money laundering norm in a very serious manner. Now over to Maheshwar Pathakji, who is the head of pre-sales and solutions of Adequacy. You have been watching this and you have been hearing this, and I view you as a service partner here. And when we have all urban cooperative bank, DCC bank, state cooperative bank, all representatives are here in cooperative sector. Have difficulties in complying to the compliance, So what type of, as a service partner, as a service provider, what help as an IT person, as an IT man, you can provide us through the cloud platform, or you can comment on that,
First of all, I would like to thank Banking Frontiers to bring me up in the right forum. My sincere thanks to Pramod Kannadji as well for using the word partners, because we like, we like to be acknowledged as a business partner by our customers, because we are like, the company which drives the businesses. Is that what we believe in? We want to always bring value add to the companies and to the banks with which we work with, right? So coming back to the discussions with the panel, the eminent panelists and my colleagues and the MD CEOs of the cooperative banks, they spoke about, they spoke about on various areas, right, from anti-money laundering, right, from risk to compliances to audit functions to income asset classification and the reconciliations. A lot of gamut of services that a bank has to kind of fulfill if they have to satisfy the compliance needs of the bank, right? And furthermore, a lot has been pushed by RBI in the recent days, and they have been quite hard on the imposing penalties and evaluating the compliance functions of the banks, the cooperative banks, right? So what we also understand from our business partners is, from our customers, is that the requirement is there, the need is there, and the rules are there, the guidelines is also available, right? But something is missing, right? So they are just not looking at a solution perspective, right? So they want something more. Now, what is that something more? So there is a gap that we see in the industry as of now, right? So in fact, so that is where we have been fortunate enough that we had a dynamic leader in form of Mr. Surajit Roy, who kind of anticipated this problem earlier, and he gave us some insights as to how we should go about delivering those solutions. So the idea, the brainchild that was kind of evolved within our innovation hub is that we wanted to build an ecosystem. We wanted to create an ecosystem, right? When I say ecosystem, it means digital ecosystem, because today everything is gone digital, right? So we wanted to create a digital ecosystem which is future ready, right? When we say future ready, it means that it should be scalable. We wanted to build a digital ecosystem which is secure. So when we talk about security, right, today data privacy, data security is become a prime importance, because we have seen from the different news forums, from the different articles and world across, there has been a lot of data leakages and all. It's been a big concern, right? So we had to ensure that whatever digital ecosystem we create, it has to be future ready, it has to be secure. And last but not the least, the ecosystem should also be customer friendly, right? So what is customer friendly? Customer friendly here means that the end customer, right? We have to understand what the customer actually needs. Now there are mid-sized banks, there are large-sized banks, and there are also cooperative banks, right? So they have a lot of budget constraints. So we understand that. So we should build up a ecosystem which kinds of gives them an platform to leverage the same solutions what the large-sized bank can do over this platform in a very cost-effective way, right? So then only it will serve the end purpose of our customers, right? So customer delight is also that we wanted to keep kind of good focus on. So when we did all this, the entire brainstorming that we done at our innovation hub, we thought how we could help our banks, right? In fact, as a matter of surprise, even before the cooperative banks came to us, we had the MNC banks, the foreign banks who have limited branches here, let's say 3 or 5 branches, based out in Maharashtra and other banks. They were the first to come to us, to approach us, looking for this kind of solutions. So what we did was, we worked out exclusive partnership with one of the largest data center providers in Asia. That they are Tier 4 certified. I'm talking here about Toyota, and we did an exclusive partnership with them. So what we do is we offer the entire compliance solution today as a service on cloud, right? So you just imagine, right? So when we say Yoda data center, we have done this partnership with them on a private cloud. So we are not going on public cloud. We understand there are data security norms, there is data regionalization concept that is coming in. So what it gives is, as a bank, right, as a cooperative bank, you will still have the administration control of your data, and whereas you can, use the benefits, you can leverage the benefits of a cloud or a private cloud to be more, comprehensive, right? At the same time, you have multiple options here. You can either go for an anti-money laundering product, you can either choose a risk product, you can either choose the entire audit management that happens in your bank, and this all is possible digitally, mind you. So this all is possible digitally. Like today we see, everything. At least the times of pandemic has taught us, in fact, the end customers also today, right? They are more than happy to, to have the banking as a service on digital channels, on their mobile phones, on their app and Androids. Customer no longer is, interested in walking up to a branch, right? First, they have to be aware of the, different crisis that's going on and the virus threat that's going on. And second, now they have enjoyed the joy, right? So what has happened in this times is the customer has started enjoying, now is the times wherein, people want to do banking through WhatsApp and whatnot, right? So there are so many things that is coming up. So what this also calls in for banks is that, look, here is the opportunity for us, okay, irrespective of the size of the bank we are, okay, that is not a concern anymore, because technology is there as a kind of main weapon. Technology is there, which is kind of, bringing a platform for all the banks. So, today, if you say that if you want to think ahead, right, you can also, bring up some functionalities where you can directly compete with the private bank. That is also very much possible if you have the power of, cloud, if you have the power of digital ecosystem. So what is more important today is a digital ecosystem. So with that, I think we kind of, fortunate enough to anticipate this quite earlier, and we also launched this on 6th of January. So compliance as a solution, you can visit our websites. We are just a phone call away. You can also talk to us. You can write back to us, and we will, sit with you. We will kind of look at what are your requirements, and every bank to bank there are different customizations that is required, right? So we'll be more than happy to to work out together with you. And today from Banking Frontiers, I would like to extend our kind of invitation to all the banks, to all the cooperative bank fraternity in general, to talk back to us, and we'll be more than happy. And I'm also happy to share on this platform. Then we will also give you free trials also, so that you can actually have a look at what is kind of service you are looking in for. Many of the banks have already started registering with us, and you can also have a look at our solution is what I would say. With that, I would thank you all once again. Thanks the panel, thanks the Banking Frontiers, and with this I'll hand it over to Pramod ji. Thanks for asking me a wonderful question that kinds of gives me to speak my heart out and convey the kind of energy that we have put in to actually bring the solutions to the bank, the end customers, and our business partners. Thank you.
Thank you very much, Maheshwarji. You have nicely explained your role as a service provider. I'm also thankful to all my participants here, the panel members. In fact, now this is time to conclude this panel discussion. And let me say that RBI, NABARD, RCS, or central or state government, so to say, all regulators, time to time, keep changing their angles. The compliance angles are being changed in the wake of new normal. And I am very thankful to Banking Frontiers. Manoj, I am very thankful to Banking Frontiers for giving me an opportunity to moderate this session. And now over to Manoj. Thank you very much.
Thank you, Pramod ji. That was Overall, I would like to thank all the panelists and Pramodji as moderator for a fantastic and riveting session. So thank you all very much for a wonderful discussion.
Thank you very much. Thank you. Thank you, audience. Thank you, participants. That was a wonderful. Enjoy this conference.